Is it audible now? Hello. Is it audible now, everyone? Okay, okay. I suppose one person has replied that it is audible now. So, can we just move forward? Everyone is okay with the voice as such? Hello. I suppose it's yes. Okay, good. So, I just said that it is 26th of July 2026, 2022, and we are in a phase of the market where a lot of data is coming in, and a lot of important data, to be honest, is coming in. And much of it has been okay, much of it has been uh, absorbed into the price action, as we have understood from the previous live streams, that market basically discounts for all information. So whatever information is coming, it has been priced in. Much of it has been priced in. Much of it depends upon the assumptions that we are doing of the data, which we will discuss further on into the live stream. So a lot of it has been priced in. A lot of data is going to come in, but a lot of assumptions are also there. So what are these assumptions? What exactly happened? Yeah. So a lot of it depends upon the fundamental factors, which is actually the geopolitical situation of the economy. But our major focus would be on Euro USD today. As such, yeah. As such, thank you very much, everyone. Welcome. So as such, we have got like a lot of data, but currently, okay. Okay. So we will focus on Euro USD. Along with that, if time permits, we will also look at gold and how the gold has been absolutely working in a trend which was previously, I said it into the live streaming, the levels which we discussed for supports and resistance while training, if you remember. So I've given you multiple levels. I've told you to short on 1801, and currently it is faring in the 1740s range, 1710, 1740. Uh, I suppose it was 20 or 22nd, I suppose 21st or 22nd, it touched the 1680 range. That was also one of the levels. So we will discuss all of it today. And fortunately, if time permits, we will also look forward to looking at the gold analysis. Okay, so let's just start with our presentation today. Okay, let's go forward. So this is the process which we have currently. uh, okay, okay. So here we are going to discuss about the euro parity. Parity basically means that 1 euro is equivalent to 1 USD. That is also called if it is in terms of there is a theory called purchasing power parity theory, which says that both the currencies uh, tend to equilibrium when there is an open trade between that. So don't connect it with that. So euro parity is basically that euro touched the $1 level while it was basically trading. So it were like 3 or 4 days it continuously touched and went below the parity level. So what were the causes of this parity, and what is the likely impact? Obviously, we have already seen the likely impact. The ECB has already increased the interest rates and has also implemented one of the bond buying back kind of a scheme, which, to be honest, is not basically uh, you know sufficient for this, to be honest, depending upon the data that has arrived. So we will discuss all of this today. I'm, you already know, Mohammad Abu Tarab Sheikh. Uh, so let's begin with our agenda today, what we are going to cover. Fortunately, if there is time, we will cover all of this. Unlike the previous session, we were a little bit short on time. So we had a lot of content, to be honest. And currently, we will go through the causes of euro decline in depth. Okay, so what all factors are working currently in the market, which we need to be very much aware about. So all of this in the first part. The second part, we will see actually what is the current scenario in euro. Okay, that involves the charting. Okay, so I will open up the chart and show you what exactly is happening in the euro. Next is the US economic situation discussion. It will be a very short discussion, to be honest, and we'll just discuss what US is planning further. Okay, so today there is going to be consumer confidence data coming out, which is very important. Next, tomorrow, obviously, there is going to be the rate statement by the FMC. So all these data are going to impact the market, even though it has already been priced in. Okay, so even though it has already been priced in, there are a lot of assumptions that 75 basis point is going to be hiked. There is also the talks of 100 basis points to be increased by FOMC, which is a big deal, and it would come as quite a surprise if that happens. Because continuously the US inflationary data is going to is actually increasing, and it's rising. It's not under control. So this might be a discussion point. This might happen. There is a good probability that it might happen. Although 75 basis points is for sure it's going to happen. Okay. So the future implications of a recession. Now, as the FOMC, as the Federal Reserve Bank of United States of America is increasing its interest rate, short-term interest rates, there is a chance of a recession. Obviously, we have heard of it from multiple news outlets. We are hearing of a recession, but what they don't tell you is we are already in a recession. Okay, we have been in a recession since the COVID times. Before COVID also there was a recession, but it was quickly moved out because a lot of financial stimulus was provided by a lot of governments throughout the country, throughout the world, sorry, to be honest. So throughout the world there was a lot of fiscal stimulus provided to the economy in order to function properly, because supply chain disruptions were everywhere, and the economy was struggling. Okay, so the overall economy was struggling. The global economy was struggling. The supply chain disruptions like basically aggravated the situation. So we are already in a recession. Where we are supposed to go, that also we will cover today. And what are the future predictions for gold? This, if time permits, we will also cover this, and probably we'll do like a technical analysis point of view. We won't go into the fundamental because that will take much time. So this is the agenda for today. Okay, hopefully we will cover it. Let's begin with the causes for Euro USD parity. Okay, what happened? What exactly happened? And to be for your knowledge, Euro USD parity happened for the first time after 20 years. It happened somewhere in 2002 November, if I'm not wrong. So that time it happened, and after 20 years we are seeing this parity. Okay, so what are the causes? One by one, we will go through. Now, ECB is a bank, is a central bank of a whole continent, that we need to remember. For a whole continent, European Central Bank is the uh, basic reserve bank, basically, and it fears of fragmentation. Now, what is fragmentation? Okay, I will just give you some hint about it. Now, as I said, European Central Bank is a bank of Europe. Okay, so what exactly is fear of fragmentation? Is that there are multiple countries within Europe. Now, if ECB increases its rates drastically, like the way the Federal Bank of United States has increased its rates very drastically, very quickly, and without kind of thinking about the repercussions, the ECB has got the fear of fragmentation, that whether certain countries will adopt this interest rate and accept it to control inflation, or they would just get out of this particular thing. Because previously we have seen Brexit and stuff like that. So it would increase the sentiment of fragmentation, sentiment of moving out of the CCB, because it would then dictate the economic situation of that country. So that has happened. Previously, also, we have seen in the case of Britain. And this is the current fear, which is basically suppressing ECB to implement the interest rate hikes. So this is one of the things why ECB is not controlling the situation. Many people ask, but this is the basic reason why it is not able to. The next is very big thing, that is oil supply crunch. Oil supply crunch has been the one of the most important reasons why this particular thing is happening. Okay, because oil is what is driving the inflation all the way up, because oil is not only used in like by the consumer, end consumer, but also a lot of oil products are used in the transportation industry and logistics, so that increases the overall costs of different goods and services as well. So currently oil supply or gas supply, as you would say, is based on Russia. So you would have heard of Nord Stream, which connects Germany and Russia. Germany is one of the flagship, flag bearers economy of Europe. So yes, okay. So it is the flag bearer economy of Germany, to be honest, and it has also suffered a lot because of this inflation. Now, why it has suffered a lot? Because a lot depends upon the gas requirements, and as we see that Germany imports nearly 80% of its natural gas requirements, and above that, a lot of it comes from Russia, and the supplies from the Russia have been declining, like from since June, if I'm not wrong. So that has created a roadblock from the to the supply side. The manufacturing has kind of slowed down, and depending upon that, one more important factor is happening on the demand side, that Germany is facing. Germany is facing a lot of demand restrictions, because the current scenario in China, which is one of the most important, I would say, most important Okay, this one is better. So Germany is one of the most biggest suppliers of technology to China, and China recently suffered a lot of lockdowns. So that also led to a decrease in demand of the German goods. So that both the sides are basically getting crunched. The demand side, that is Chinese lockdowns, and the supply side, that is the manufacturing side, is getting crunched because of the oil supply problems. Also, there was a Libyan crisis that we might have heard of. So, multiple things are happening in oil as such, and oil is super inflated currently. That is one of the most important problem that the Germany is facing right now. And Germany is one of the data that is extremely important, I would say. That is the ZEW estimates was absolutely crushed. I suppose this was. Hmm. So this came nearly on 12, I suppose 12, 13. I don't remember exact date, but this came up and it was way below the expectation. It almost shows us that it hints that the German economy is slowing down. Now, German economy slowing down is one of the uh, most, I would say, oxymoronic statement. Because Germany and slowing down doesn't make sense in one single statement. So this was one of the most important data which single-handedly could take down the euro's price. So this was way below its expectation, and that is why a lot of depreciation happened in euro. Apart from that, we have seen that PMI has come up. PMI is nothing but purchaser managing a managers index. So there are multiple purchasing managers who basically control the requirements of the industries. So this is basically a leading indicator that the demand is lowering. That is why the purchasing managers are ordering less, because the orders that are coming are lower. So it was also very lower for all the major European nations. If you would check out the exact data, then you would come to know it was actually very low than expected. Okay, and it also hinted at the possibility that euro economy is actually shrinking, because a lot of data was less than 50. Above 50 is actually economic expansion, and below 50 is economic contraction. So you would see a lot of data in services and manufacturing as well, that the data was shrinking. Talking about shrinking, the Germany's data was also very worrisome. So this is another factor, another data that led to depreciation. Next is US CPI, which is nowhere under control. Okay, so US core CPI just excludes the energy and food sector, which because it is a bit volatile categories. So it increased 5.9%, slightly below 6% in May, but above the forecast. The forecast was of 5.7%, but it happened to be 5.9%. What does this mean, sir? So this basically means that whatever the US Federal Bank of United States is doing is not enough to control the inflation, and this also means that the inflation is going to be there, okay, for a very long time, longer than one would expect. So price stability is the major aspect. Once you, if you see the federal members talking about inflation and talking about increasing the interest rates, their hawkish statements, if you would study them, you would come to know that they all talk about price stability, but the price stability itself is quite out of control. Okay, there are multiple factors in that also. If we will go, then it all started with the fiscal stimulus that was provided by US just at the beginning of the COVID pandemic. So that led to a lot of spending, that led to a lot of uh, demand side increase. So that led to a lot of people buying so many things, and there was supply crunch as well. Yet the prices were kind of inflated, and people got money for almost like nothing. The interest rates were very low at that time, and like the US provided fiscal stimulus. So that particular nature getting indebted into the people, that led to a lot of buying nature of the consumer behavior, and that led to a long term inflation. Okay, so many things, one thing leads to another. This is what is economics. So one thing leads to another, and we have got here like 5.9% is the core CPI currently, and it was forecasted to be 5.7%. Now, one of the most important data that I would like you to basically follow is the FOMC rate statement, which is going to come out tomorrow. Okay, tomorrow probably 5:30 Indian Standard Time, 5:30, 6:30, something like that. So you focus on this data, or everybody, almost everyone is waiting for this data to come out, whether it is 50 basis points, 75 or 100, whatever it is. We need to look at this first. Okay, and that would decide how different particular you know binary pairs or commodities is going to go in which direction. So all of this has been done. We have understood the euro's decline, why it is happening, why euro economy is shrinking. We have understood why US is basically forced to increase its interest rates, despite knowing that a lot depends upon its own policy, a lot depends upon US economy, that it knows, and it also knows that there is a global responsibility of US, because a lot of money is basically globalized into the whole economies of different countries. And as the US is increasing, it has went into a cycle of increasing interest rates. I know it is a bit boring, to be honest. When we are on the chart, everybody is kind of excited. Yes. Hello, everyone. So everybody is excited on the charts, but here a lot of basic, but very important things are going to be discussed. So just bear with me. Slight things are going to come. Slight data related topics. So US is basically controlling the whole global economy. Why? Because today's economy is completely globalized. Okay, a lot depends upon US, how it handles its own economy. So as it started increasing, and as it went into the cycle of increasing rate hikes, so a lot of other countries also has also followed suit. For example, we are from India, so Indian Reserve Bank of India has also increased the uh, basically the repo rate. So what exactly this means is that we need to look at the US data, even though we are not from this country, or we live in some other country, or who cares about US economy? But it is somehow globalized. The whole situation, the whole world is globalized economy, and that is why, as a flag bearer of the global economy, US data is very much important. So if tomorrow's FOMC rate statement comes out and it will be 100% an increase in the rate, so how much it is, like it might also be 100 basis points, which is almost a percentage. So that can also be possible. You just don't have to expect what the whole market is expecting. There are a lot of surprises that are coming in, especially the German data which we talked about. Okay, this German data was especially surprising. It basically shocked us, everyone. So a lot can happen. Okay, we need to understand this. Another important data that has come out for US is the CPI data. There's Consumer Price Index. What this indicates is the inflation rate. Okay, inflation basically means overall rise in the prices of goods and services. So that has been 1.3%, core CPI 0.7%, which is again very much high. Okay, it is higher than the expected uh, numbers. So next thing that we have seen is producer price index. So to give you a perspective, consumer price index is consumer based, like the retail inflation. It measures retail inflation, and the producer price index. Now what is this? This is the wholesale inflation. Okay, so at the level of the producer, at the level of the wholesaler, this price index stands true. So the July PPI was basically 1.1 and core PPI was zero point 0.4, again higher than the expected rates. So what does this suggest is that the inflation might sustain a bit longer. Okay, inflation is there to be continuing, and despite the interest rate hikes, it might be the case that a lot depends upon the inflation data. Once it stabilizes and then it goes down because of demand side crunching due to the inflation rate hikes. So this we need to see that how the CPI data and the PPI data is working. What is the trend in the CPI and PPI data? Because a lot depends on this also. Because once the CPI stabilizes, then only we can say that a soft landing is possible, in other words. So other than that, recession is already here. I'm not telling any I'm not scaring anyone, but recession is already here. A lot depends upon the US data which is going to come out tomorrow. And another thing is that the PMI services, that is the purchasing managers index, also declined for services in US, and manufacturing data was also above basically expectation but marginally. So that also means that there is some form of contraction in the US economy as well, based on the demand side contraction. So a lot depends on this particular sector. Now if there is a question in the sense that, sir, so many bad things are happening, so is it like that USD, the US economy is in bad shape? Is it like that? So I would say we are not to judge particular economy, but from my perspective, increasing inflation and risk aversion, which is going on currently, has put pressure on the stock indices. Although there are minor fluctuations in which the SP 500 or Dow Jones index is closing a bit higher, but what is happening is overall it's a downtrending market. Okay, you cannot say much about it because it's obviously downtrending. The stock indices are basically ranging also. So case by case it changes, but overall the inflation is there to increase, or probably if it stabilizes, then still rate hikes are necessary in order to control inflation and keep it below. So another part is that the the currency, that is dollars, has basically become a safe haven right now. What is safe haven, sir? That means people basically convert their own assets into US dollars. That is liquidity, because the market is shrinking right now. So this is also happening, and that is why there is an appreciation in US dollars also. Now, why did I say this right now? Is because we are we are basically looking at this, na, Euro USD parity. Now USD, if USD's demand goes up, what happens to the euro? Obviously it will depreciate, correct? So this is the way of understanding the market. Okay, another thing, almost yeah, we will do that. So this was everything on this. Okay. Hmm. So this was everything on everyone here. Okay, done. So this was everything on the euro datas, fundamental factors which are working in the euro USD and other pairs as such. Now we are going to look at the chart itself, and let's see what have we got here. Okay, we are starting this. Hmm. So let me share you the screen for the charts, and let's start doing some analysis on this. This again is the okay. I've done something. Hmm. So this is the chart for USD, Euro USD, and we can see this green line for your reference is a parity level, that is 1.0. So these were the days where the Euro USD flirted with the parity, 11th July, 12th July, 13th July. Okay, and then it somehow recovered. I suppose the data came out and the ECB announced that it will be increasing the rates, so that is why it pumped up again. Now we see that the volumes are very low. If you can see here, the volumes are very low, and that is why there are chances that it is again going to go down. Uh, and that is basically from technical perspective. The moving averages also say the same thing. Now, if we kind of add up to understand the levels and stuff like that, I will just show you one thing. This one, yeah. So this is basically a Fibonacci retracement, and we see that multiple levels have been actually working. This one was the only exception. This candle on 13th July was the only exception that the price went below the channel, and then it recovered. Now it recovered up to the point of this 78.6 level, 78.6% level of Fibonacci retracement. Then it started gap up. Gap up also suggests that somehow it is going to go down and somehow it is going to cover this gap. Okay. Now this is the situation currently. People are basically waiting for some strong evidence of where Euro USD is going to go. Okay. But wherever it is going to go, the whole resistance and the support level is going to be all these lines. Okay, all these lines are going to be the support and resistance levels only. So every day we see that there is an opening here, then it goes all the way down, and it might just cover itself and just position itself here. Or if the data, now current data is going to come out of consumer confidence data, just if we are going to cover our session at 6:30, right? We are going to wrap up at 6:30. The data is going to come out at 7:30, and that is called consumer confidence data, very important data from USD perspective. Now if that data, obviously it is going to be in the red zone only, but still if there is hope, the USD is going to recover itself a little bit. So consumer confidence might not be in the green zone, but still it would be better. Like the expectations and the actual data would actually be better, not very dangerous. So if you're understanding, if you're seeing this particular data, you would know what I'm saying exactly. Okay, it would be in the red zone only, but might be in a safer zone as I expected, right? So this is the situation currently. These are all the levels that you need to look out for. Now how do I make this? I basically use the Fibonacci channel Wala tool which we have in the Pro Trader. This is the Pro Trader account of Vantage, obviously, and this has allowed me to do all these amazing things on the chart. Now we have seen that this particular level, that is 78.6, 61.8, this line, green line, 50, that is Dow level, okay, and 38.2, this one, this level, this light green level, it's very important level, okay. So the price might go all the way up to this point, and it might reverse. Every single day you have to cover this level. If the price is going up, now it is a bearish movement today, but if the price is going up and up, it won't be able to cover this position. From my perspective, from this level it might not just cover this position, uh, and if it is breaching with a strong point, with a strong candle, then it might result in the next level zone. So next line it would target. Currently it is working in this, this is the 61.8. 61.8 is actually working as a strong support, and another one is 5.5, that is Dow's level. So removing the cluttering, I will show you what exactly is happening. Hmm. Now we have done the previously the trend line analysis for Euro USD, right? You have seen that Euro USD is constantly declining. Okay, it has been constantly declining from this point onwards. We have drawn a trend line. We have drawn another trend line from here. So we will do that again and understand what exactly is the future prediction. Because primary trend can only tell us the future prediction. Otherwise, it depends upon the data and sometimes upon. Let's just extend it to the right. Yes, we have done this. Okay. Another trend line we will draw from this point. Join this one. Okay, I will do that. This point. Drawing trend lines is a kind of a messy thing to do because the magnet is on and it goes elsewhere. Okay. So these are the two trend lines. As discussed previously, this one is the primary trend line, and this is a trend line which has basically sharpened the movement. Okay, it has started moving in the downtrend in a faster way. Okay, so this is what is happening. Now, if this particular candle is going to pull back, it is only going to pull back up till this point. Tomorrow it will be this point. Next day it will be this point. Now, breaching this trend line is very hard for the price movement. Breaching this trend line is very hard, and we will see again a decline, to be honest, to the parity level and below that. Now the below points we cannot just suggest right now, as of now, because a lot depends upon the data. So we can consider that the next movement, if it happens, would be somewhere in in this range. Okay, because the lowest low recently, the swing low was this point. Okay, this candle. The lowest low is 999518. Okay, so 0.99518 was the lowest low. So it might be the next target. If you are shorting at this point, if the data comes out in your direction, then you might keep this as a target. Stop loss would obviously be this. Now above this previous high, this particular line, because this is acting as a very strong support, resistance zone. Okay, wait, I will just show you. This is acting as a very strong resistance zone. Okay, this is happening. This is again going to work for every single day's movement. So this is going to be your stop loss somewhere around above this zone, and we can short it. uh, Obviously the data is going to come out in the way the market is assuming it to come out, and again the whole thing is going to go down. The Euro USD, you can obviously short. The levels you can understand once we post some reports. So join us on Telegram, join us on other social media platforms. So as to get exact levels as such. Another thing is, if the data, let it be, if the candles just breach this particular zone above, and it closes below in this zone only, if there is a wick, basically don't consider it as a breakout. Okay, if there is a single wick in this zone and you say that this is a breakout, then it would you would be in trouble, because obviously the whole data is bearish only, and it is going to go down till this parity level, or below that we don't even know what is going to happen. And as we saw that the volume is basically decreasing. Okay, these 2 3 days, because of the euphoria in the market that European Central Bank has somehow come to the rescue of euro, so people went into actually long this thing. But we already know it is in a downtrend. It is again, the downtrend has sharpened from this point, and there is a strong resistance zone from in this region. Okay, in this region there is a strong resistance zone. Okay, and again we have seen that the parity has been breached multiple times, and above that the data is also going to come out bearish, and the volumes are also going down. There are so many confirmations in this particular thing that the price movement might go down, and today also it has gone down. Today also it opened way up. Okay, this red candle, this closed, this opened here, it closed here, and it opened way above, near to the previous day's open, and then again it went down. What does this suggest, sir? That the volumes are decreasing and the price is constantly moving in this direction, in a sideways direction. That means the market is waiting for something. Okay, and that something is going to be tomorrow. Tomorrow you already know what exactly something is there, and it would just go down again. Okay, so this is currently almost, what do we see? uh, Wait, I will just show you. This is sometimes called an island cluster. Okay, because there is a gap here. Okay, there are wicks, but we can consider it almost a gap. uh, Not exaggerating this point, but okay. So almost a gap has been formed here, and this is something looking like an island cluster. That means somehow it wanted to go up, but it couldn't. Okay, because of the data, because of the news in the market, it wanted to go up. It was actually bullish at this point. The volumes also suggest the same, but the market is awaiting the data. That is why the volumes went down on 25th July, 26th July, and now the market is waiting when to where to which direction to go. So this sideways movement is basically the market trying to make sense of things. So you also try to make sense of things. You don't trade currently. Okay, once the data comes out, then you can surely take a trade in Euro USD. Okay, this is the scenario. Now, if we are talking about intraday, let's do an hourly situation. What is happening? So you can see how it is actually working. I've drawn this resistance based on the daily, okay, daily chart. So you can put a limit order some in this range. You can put a limit order in the entry also. You can put the stop loss. Wait, I will show you. We have to only short, huh? In a downtrending market you cannot buy. I've already told you that. What I've told you that the trend is your friend. Okay, and you always listen to your friend. Okay, keep the stop loss somewhere here. Now look at this. Whenever the price comes into this resistance range, you short it. Keep the target price just above it, this level, just above this resistance zone ka above level. Okay, not resistance zone. This is called supply zone, when the supply starts moving in. Okay, this is not resistance zone. There is nothing like resistance. This is supply zone. Sorry for that. Uh, and you can keep target price based on your risk to reward ratio, whatever you want to. And you have to be patient in this, because the price is somewhat moved back into the zone, and you might fear that a breakout is going to happen. But just remember and understand that this training is very essential, which I'm giving you right now. That is why the price is not moved above this range. When I say that it is not going to breach the zone, it's obviously not going to breach the zone, and it has done the same thing. Okay, multiple short positions could be taken. Another short position we will take. The price went up, so what you have to do, you have to put the limit order on the entry of this zone. Okay, not on the exit, but on the entry basically. So put the limit order here. Okay, I cannot change this, but somehow you understand, right? So entry will be this lower line, also called proximal line. So this is the line. Okay, where you will put your, the level is 1.02352. Okay, this level. You will put a limit order here. You will short that limit order, and then you will see the results. Multiple opportunities have been given to you. Consider trailing stop loss in this situation, because we don't know how long it is going to go down, how much it is going to go down, because it has somehow made a good impact here. This was the level on the 14th July. So many opportunities have been there, but you still buy Euro USD. I don't know who buys Euro USD in this situation. People still do it. People still long gold. I don't know why. When I already gave you the idea of shorting gold in 1801, at 1801, when the price was faring at 1801, I gave you the idea of shorting it. Okay. Euro USD. Hmm. Now starting with gold. Okay, this one has also been done somewhat. Okay, good. I'll put the daily candle first so that to understand the whole situation. Okay. Now it is again in a downtrending channel. We have already seen how it is working. Now this channel is actually working way better than Euro USD wala channel. Okay. This is telling us that the levels are actually working precisely in a good manner. So multiple times the support has been taken on the 76.4, 78.6 wala level, which are all retracement levels for your information. Then the price has been constantly testing at this point, constantly tested this level of 61.8. 61.8 is very important level, so it has constantly basically tested these levels. Then it breached out, then again this resistance has happened. Look at how precise this channel is working. It could not finish up. Okay, it could not breach this line. The only way it breached is this particular candle. It breached I'm not wrong if it is 61.8, right? This level was 61.8. It breached that, and it went all the way up to the 50 level, that is the Dow's level. Okay, so this is somewhat of an advanced understanding. We will surely do that in the future. But coming back to the trend line analysis, the most basic, the most useful, I would say, yeah, we can say obviously we had drawn a parallel channel, downtrending channel in this way. We'll do it again. We'll understand what is going on. Okay, okay, manage this, and then if we are getting somewhat of a breach, then we have to change it, or better yet, we will do a parallel channel. Okay, the parallel channel is here. Okay, okay. Little time. Obviously, we have to be very patient. We are working in the market, then we have to be patient, obviously, right? Now, these are the wicks. We don't care about the wicks. Okay, but these bodies we need to accommodate. What you will do, you will update your trend line accordingly. I updated my trend line and good to go. Now it is a channel, right? Now, previously I told that this was a important level. Where it is? 1740 was an important level. There it is. 1740 nahi, 1708 I suppose. 1708 something. 1707. This level was somewhat of a support level. So you could have considered it as a zone plus minus $5. Then you could have gotten a good zone here. So look at this, multiple levels has been tested at this region also. That is why it is acting as a resistance almost, I suppose. Right? This is a whole zone working, and this is not proper, to be honest. I would not consider it a proper zone. So we'll look for other clues. Okay. Look for other clues. Like this particular point, which I have explained it into the basically the market. Okay. So this was an important zone. I told 1678, 1670, 1680 basically. This was again an important resistance zone, 1750s. So by extension, 1750s would be, you would update it to this point, 1740 range. Okay. This is acting as a resistance. This is acting as a support. 1677. So it reached 1680 almost. Look at the low here, 1680.8, right? So you could have kept a limit order here because this was the level of support. Now, if I'm saying 1677 doesn't mean that it is pinpoint 1677. Okay, what does it mean is it would be a zone plus minus $5 that you have to do. That you have to do your own homework and you have to update it accordingly. Put a buy limit order here and it would have gone up. But the thing is, it is a downtrending market. We don't need to buy this. We need to short it. We need to look for opportunities to short. So short at this range, 1744 range. Again, range. Okay, this is not a pinpoint level that you have to take up. Sir, your price never reached your range. Then that you will accuse me of. So don't worry about it. You basically have to update your channel and update your zones properly and consider it as a zone. The level I'm giving you, it is consider it as a zone. The 1744 is another zone of resistance. So you could keep a limit order here of shorting gold. Now the volumes are very low. Look at this. Today and tomorrow, today and yesterday, the volumes were unexpectedly very low. That is why there has been indecision candles that have been forming out. Okay, these are called indecision candles, which means they have a very small real body, and wicks are actually larger than the real body. Actually, the light is very harsh, so yeah, so no worries. So this again, I would say you would get the answer by yourself if you would have paid attention into the session, that why is this happening, why the volume is going down, why there has been indecision candles forming in the gold, why it is happening. So sir, I previously told you that the market is expecting data. It is expecting which way to go. It is telling us that, sir, wait, we will look at the data first and then we will start doing the buying and selling. So that's what important and smart, astute investors are doing currently. They're waiting for the data. That is why indecision candles are being formed. Okay. You don't have to touch the market here in the indecision. Once the price reverses or once the price gets into momentum, once the volume start becoming higher, you have to see all these factors in order to trade smartly. Okay, in a smart way, if you have to make decisions, then this is the way to go. Okay, now there was a buying opportunity at this point. Now if it breaches in the same way, if the price is going to breach, okay, I've done some gold research as well, which I'm going to tell you. So the demand for gold has decreased. Okay, in the fundamental side of analysis, the demand for gold has decreased because of obvious factors. Because of interest rate hikes, people are squeezing out their money, okay, and putting it into the liquidity. So whatever happens is that people become more thrifty in this situation, in a recession situation. If Okay, really sorry for the disturbance. There was some technical problem. We will just get back to this. Really sorry, guys. There was a technical problem. We'll start back up. We've got 5 minutes, 4 minutes of time. We overcome and adapt, isn't it? So there was some problem with the laptop. No worries, I've resolved it. Now we are going to just cover up for the gold part and then wrap up the session. If my voice is not audible, please let me know if there are any other things that is not happening, or just give me a thumbs up on the chat if you would. Just give me a thumbs up so that we can proceed, everyone. Hello. Okay. Is it visible, everyone? Right, we was watching. Please tell. Okay, no worries. I suppose everyone is able to listen to me. Everyone is able to look at the screen as well. So we'll move on. The last part I was explaining is the gold demand has decreased, and that is why the volumes have decreased due to the data, incoming data. People are waiting. The market is waiting for the data to confirm what is going to happen in the future. Now, as long as many people say that gold is now going to pump up now because it has touched like historic levels and stuff like that. But unless and until this breaches this parallel channel, I've already taught you that you have to wait for confirmations. No matter who is saying what, okay, don't long gold, okay. I've given you the opportunity to short gold at 1801. Those who did were in good basically hands, and they did a lot of earnings. But if the price is moving in somewhat this direction, if the price is moving downwards, now it will take this middle line of the channel as a support level. Now if in some time it touches this middle line, and then it goes back up and it breaches both this level, okay, not just this level of the upper channel, but this level also. Now there can be case when it would touch this level and then come back for a small pullback and then again it move up. So if there is a chance of a reversal in gold price, then it might be a possibility because of the current data. It might be a possibility. We are not completely denying it, but it is a very small probability that is it is going to happen. What will happen is, in case of longing, because people are longing by like gold right now. So what I would suggest is wait for this confirmation. Wait for this confirmation. Wait for these confirmations. Okay, point one, point two, point three. Point. Wait for this confirmation. Okay, wait for this confirmation also. These two are confirmations. Okay, these are resistance. Once it is breached this resistance, then only we can consider of buying gold. Okay, in the market. Now this is a very small probability, but still I've shown you. Now let's go back to our original discussion of what to do in an intraday level. Okay, so looking at the 1 hour chart, you see how precisely this particular thing is working. Multiple times this consolidation has happened, and then it has gone down. Again, this consolidation, you can draw one more consolidated price range is here. That again is a level 1706, that is 707. Already I've given you a level of 1707, right, previously. So these three levels are currently happening. Consider this as a middle support, lower support, and this is the resistance. So you can work in these ranges. Once it goes at this level, you can buy, and once it reverses from this level, you have to get confirmation. Otherwise it would break down from here, and then it would touch this target. Then the target would be this 1680. Okay, this is how it is happening in the gold market in the short term. Long term, I've already told you, it is downtrending market unless and until you get this confirmation. I've already told na confirmation. Yes, these confirmations you have to wait for in the long term. Okay, you cannot just buy gold for now. So I suppose, despite the technical difficulties, we have somehow managed to complete this session, and somehow managed to complete it in wholesomeness. Everything has been completed. So I'm really happy. I suppose you guys are also happy. Uh, there were technical problems based on this Facebook also. So viewers are less. I'm really sorry you wanted to join via Facebook. Uh, but those who have joined via YouTube, you are all welcome. Thank you very much for being a patient listener, a patient audience. And I would say that's all for today. We have got another session planned next week. Then I'll see you then. And happy trading. Understand that the market is at a stage where now it is understanding, it is making a sense of the situation right now. So don't be hasty in taking decisions just to trade. Don't trade just to trade. Okay, wait for certain opportunities to come up. Now, these opportunities will come up. Okay, as I've shown you multiple levels where you can short. Look for shorting only. In a downtrending market, look for shorting only. Even though you might have lost in a speculation in, like you would say, sir, if I would have bought this, then I would have gotten these much profits. But if you have to be safe, on the safer side, then you have to be respecting all these rules of risk management. So you have to also manage your risk as well. I suppose we have gotten our time. We have completed our content for today. I hope everyone is happy. Happy trading, guys, and see you next time. Bye. Take care.